Good afternoon, ladies and gentlemen. My name is Nakamura, CFO of the company. Let me explain the results for the full year for the year ended in February 2025. As usual, I am going to take you through the results of the year, followed by the business strategy presentation by Mr. Kawano. Let me go through the summary of the results for the full year. For February 2025, on the consolidated basis, this is the overview of the results. So we have the rental space business, and we have the leisure and accommodation business. Those two major businesses have been performing very well. As you can see on this page, we have seen the strong performance of the rental space business and also leisure and the lodging business as well. And we surpassed 10 billion yen on the consolidated basis in terms of the top line for the first time for the leisure and the lodging business. And for the full year, on the cumulative basis, we were able to make the record high revenue as well as ordinary income. And based upon apples to apples comparison, excluding Lily Color, on the consolidated basis for the full year, we were able to achieve the higher result compared to pre-COVID period. So our business performed very well for the full year in the year ended in February 2025. At the bottom of this page, we are showing the topics. We have acquired Fabit, which is a shared office brand, and we are trying to promote rental spaces and shared office business more efficiently. And we partnered with Ion Mall, and we have Lectore Hanyu Terrace, which is a new business format, was started. And regardless of this or other formats, we are promoting different formats. And we have made Lily Color and Novalese as consolidated subsidiaries. And we are trying to expand the enterprise values in partnerships with Lily Color and Novalese as our consolidated subsidiaries. And based upon these topics for business, later on, Mr. Kawano is going to give you the details. Now, let's take a look at the financial results of the year ended in February 2025. First, on the consolidated basis, let's take a look at PL. Please look at the red box, which shows the performance for the fourth quarter and on the cumulative basis for the full year. From Q3, we have Lily Color included as a consolidated subsidiary. So because of that inclusion, revenue, OP, and ordinary income are much higher compared to the previous year. For the full year, on the cumulative basis, revenue and ordinary income were record highs. Excluding Lily Color, on the apples to apples basis, please go to the next page. This is a former company's organization, excluding Lily Color. This is a PL comparison year-on-year. Please take a look at the red box. Q4 and the cumulative basis full year. For both, we performed very well on the apples to apples basis as well. Rental space business and the leisure and lodging, both of those businesses saw a very strong ADR and unit price, surpassing the results of the pre-COVID period. On the next page, we are showing the trend of the revenue by service excluding Lily Color. And this is a breakdown of the revenue by room rent, option, revenue, and so forth. And as you can see from this trend, we've been performing very well overall. If you look at Q4 before COVID and Q4 of the previous year, compared to those two periods, we were able to achieve higher revenue in this fiscal year and Q4. And Q3, this is the seasonality, regular seasonality. So I think we are going to see much higher Q1. So this is the regular seasonality, which we confirmed in Q4 and for the full year. In particular, if you look at the breakdown of the revenue, before COVID, Garden City Shinagawa, which is a large facility, was a major driver for the sales. And also, the sales mix of room rent was large before COVID. So we were dependent upon the regular simple room rent sales. And we had most of the revenue coming from the simple volume of sales of room rent. But if you look at current breakdown, in Q4 of this fiscal year, we have a higher mix of other revenue sources, such as option revenue, which means for the room rent, we've been trying to appeal higher values. We are trying to add more values. So room rent has been increasing. And also, we do not depend only on a single source of revenue, but stably, we are expanding revenues in the balanced way from different sources of revenue now compared to pre-COVID. Next page, please. This is a balance sheet and a cash flow statement. As I mentioned at the beginning, we have made strategic investments, including M&As, and we've been actively opening locations for the rental spaces. So in this fiscal year, we actively invested, so the cash and deposit decreased, and they were converted to the fixed assets of the companies that we invested in, or businesses that we invested in. So while generating good sales and revenue, we are trying to plant seeds for future income. So the cash, 14.5 billion yen, which is the appropriate level. We've been spending appropriate level of cash, and we have been doing M&As. Therefore, we've been able to make the best use of cash, in our opinion. And we acquired Lily Cutter and Novalese with a 50% or higher stake, and they are going to be put on the balance sheet. So because of that, equity ratio is expected to go down, but 34%, which is a pretty stable equity ratio, while expanding our balance sheet and doing acquisitions. And we have done a share buyback as well. So that's the situation for the balance sheet and the cash. Next, let me give you more details of the business situation for the February 2025 year. First, in Q4 for 3 months, this shows the status of the facility openings and closures. 4,159 tsubo, that's the size, which includes 1,700 tsubo of the rental spaces. And below this page, you see the breakdown, the opening in Kansai near terminal stations. We have opened new locations, which are large in size, one after another. As a result, for the full year, 13,868 tsubo is the total addition of tsubo that we were able to make for the full year. So this year was a year when we were able to actively open the new locations.
And as a result of that, the number of facilities and number of rental spaces by grade, we have 275 facilities in total. And in terms of the contract space, we have 160,000 tsubo. And so the company owns a very large rental space and large spaces. And I think you can see that from this chart. And excluding leisure and lodging for rental spaces and flexible spaces, you see the KPI and the sales per tsubo is shown here. For Q4, we have ended at 35,812. Compared to Q4 of last year, it's an increase by 2,526 yen. And we are seeing a steady growth on this chart, and we have been performing quite steadily. And in this current fiscal year, we expect this to be much higher than before COVID, so we have very strong expectations. And lastly, this is excluding leisure and lodging, and this is the sales breakdown depending on the use case for rental space and flexible spaces. And this is the sales mix. And the right-hand side, if you could refer to the bar on the very right-hand side, which is the receptions and parties, which is the third from the top, is increasing. And number 4 and 5, trainings and seminars are increasing in mix. And so we are able to improve the value or increase the ASPs. And based on this mix, you can tell that we are getting a higher value add project. So that was very brief, but that was a recap of the results for the fiscal year that's just ended. And then from this point onward, we'll have Mr. Kawana, our CEO, to give you an update on the business strategy. I would like to take over and give you an update on our business strategy. First, starting from the rental space and flexible spaces. For the full year, roughly 6,000 tsubo worth of new openings and space expansion had been achieved. And at the beginning, we said 6,000 tsubo, and I thought that was a high hurdle, but we were able to achieve that target. And for this fiscal year, we are in March and April, and we are 1 month and a half into the new fiscal year, and TKP and the share office Fabit will be utilized, and we will be jointly opening the facilities. And right now, the ones that are finalized are TKP Fabit Shibuya and Fabit Umeda in Osaka. And in Shikoku, within the JR Takamatsu station, TKP Fabit Takamatsu are planned for opening this fiscal year. And in addition to that, in Minato Ward and Chuo Ward, we are pretty much close to finalizing the procuring the spaces, and we are planning to open around 4,000 tsubo worth of spaces this year. And we are thinking of increasing by 20% this year to 7,200 tsubo, and already 4,000 spaces are finalized at this point. And so we have a very steady procurement of the spaces. And for Fabit, as you see here, instead of opening the spaces under Fabit brand, share office and TKP will work either way so that both brands can be used. So we will use the TKP Fabit brand. And Fabit, this is a rental office where the headquarters can be registered, and for the offices where the registration cannot be done, the TKP brand can be used for long-term office rentals. But being able to register the headquarters for such office buildings, TKP Fabit will be the brand that we will use. And for meeting rooms that are used by the hourly basis, this can be converted into monthly offices, but also can be rented as office space that can be registered. And so once you go through, the TKP reception will be called TKP Fabit, and there will be co-working space, and the meeting room can be used for meeting rooms, or it could be hourly rental spaces, and the larger rooms can be used for meeting rooms, or it could be converted into office. And so this will be a product that can be used in either way. And before, the hotels and inns can be used as a educational seminar rooms for the corporates, and weekends it could be used for accommodation. And in a similar way, this could be used for rentals, or it could be used for offices. And Vijas or Viva cannot be able to do this. I mean, TKP is the only one who can do this. And by doing so, the Fabit spaces and the TKP Fabit spaces, I think, can be expanded very quickly. And moving on to the leisure and lodging business. With regards to this business, on February 5th, Grand Lectore Yugawara was opened. And before, it was a training center for Sompo Japan. And we used to operate this under Rectore Yugawara. But we have gone through renovation of this facility, and we have reopened it as the Grand Rectore Yugawara. And the benefit here is being all-inclusive. I mean, it has a lot of halls or meeting rooms, but having too many meeting rooms is not beneficial. So by using those spaces, we built some sauna rooms, and it could be used by women or men together, and it could be cold sauna or a sauna with a view or a really high-temperature sauna. So we introduced a variety of sauna, and we have hot springs pulled from Yugawara, and on the garden terrace you can do fireworks, or in the main lounge there's the darts bar, or there's the all you can eat and drink type of restaurants. And for the younger people, you're not able to serve drinks, alcohol, but for the adults, we can serve alcohol drinks all night, and everything is inclusive. And this is a new way, I think, of a communication method. And on the weekdays, we want to try and capture the training demand for the communications, and they can have meetings by having communications with the employees, and it will be open for general public as well. And on the weekends, it could be used by families or couples or inbound tourists. And so this is the type of facility that we want to take on a challenge. And by making it all-inclusive, we won't have to spend as much labor cost. And so taking that into account, we want to open up a new format, and that was the intention behind opening this facility. And moving on to the other openings. Appa Hotel, shown on Tsujido Station, and the Miyagi Fukuoka Station front are opened, and the Appa Hotel operated by TKP, including under construction. We have 17 buildings, 3,157 rooms, and the ASP is rising, and especially during the cherry blossom season, we had the best ADR and the utilization occupancy better than before. And Lectore Hanyu, that's opening on April 24. Ion Mall Hanyu is the location where we are opening this accommodation facility. And in Ion Mall, the guests can enjoy Ion Mall and stay at this facility to enjoy the venue, and also we can use halls in Ion Mall and enable education and seminars for corporates. And the one we're opening in July in Ishinoya Beppu Shonin Park, and this is as a Park PFI business, where the park is operated by Beppu, and we have built an ocean view facility with restaurants and a facility that allows photo wedding and commercial facilities too, and we are opening this facility in July. And the page here shows the progress of the opening. These are the hotels that are planned for opening after February of 2025, and this is the plan that we have.
So at the moment, we have 30 facilities directly owned as of the end of February 2025. And other than them, as I mentioned earlier, there's Rekutore Hanyu and Ishinoya, Shonin Park, Appa Hotel Ita Ekimae, opened in December. And then in the next fiscal year onward, in 2027, we are going to have Hakone Gora to be opened. Ishinoya, probably Hakone Goya is going to be opened probably in December. Moving on to strategic investments and the business strategies and partnerships. So we have just announced the partnership with Intermedia and acquisition of Intermedia, making them 100% owned subsidiary. This is a business of the lighting company for hotels and the business facilities, acoustic image services, contents, acoustic video streaming. They do the rental and a sales company. And in Yume Hotel, which is a luxury hotel, we have done many events using their contents. And this is a company with a revenue of 400 million yen. By working with TKP, we can generate more synergies through insourcing the lighting and acoustic audio facilities. And also, we have just announced Hokkahokate partnership, and we have announced a partnership or business partnership with Hakulei, which operates Hokkahokate. Hokkahokate is a company who provides lunch boxes, bento boxes. And they have catering Suisen, which is the lunchbox catering company. And we have decided to invest 35% stake in catering Suisen to work more closely with Hokkahokate, rolling out food and lunchbox services. And this page is on the progress of our partnership with Lily Cutter and Novarese. So we have satellite showrooms of Lily Cutter in TKP facilities, and the trade shows are being held. And also, the managing director, Mr. Okada from TKP, is dispatched to Lily Cutter, and he became the vice president of Lily Cutter. And he left TKP, and he's concentrating his time and effort on Lily Cutter. And Escri, which is a company that we invest in, and we have the interior business in this company. And the president of Escri, Mr. Shibutani, became the director, external director of Lily Cutter. Lily Cutter is a company who does the wallpapers for the ceilings, walls, and so forth. And they sell materials for wallpapers, and towards the full integration, vertical integration, we are working with those companies, Lily Cutter and Escri. And also Lily Cutter, Appaman, for apartments managed by Appaman, we are promoting the usage of Lily Cutter materials and products. And in Appaman FC, we are using Lily Cutter wallpapers for apartments and condominiums managed by Appaman. And the Novarese partnership. So in the branch of TKP in Hiroshima, we haven't been able to insource the catering, food and beverage service. So using their kitchen, Novarese kitchen, they are providing the catering, food and beverage for TKP. And starting from September in Hiroshima TKP, we are going to start serving food and beverage cooked and made by Novarese as catering service. In a hotel, food and beverage, director heading that business is now dispatched to Novarese. So let me next talk about future strategies. Lily Cutter, Novarese are going to contribute to a business revenue, OP, ordinary income. We are breaking the record high levels of all of those financial performance. And in this fiscal year, rental spaces, 7,200 tsubo is the total space. In this fiscal year, for February 2026, our projection, revenue, 103 billion yen, OP, 7 billion yen, ordinary income, 6 billion yen, net income attributable to owners of the parent, 3.2 billion yen. Those are the forecast for the new year. Let me explain about our strategy for the future. So our business model has been to convert the spaces which have been determined to be demolished, converted to renter spaces on the hourly basis, on the time basis. And for those customers, we've been providing other contents such as F&B or lodging and leisure contents. And to B2B customers, we've been providing rental spaces and shared office businesses. And this is the space regeneration and the distribution business concept. And of course, we are going to grow this business, of course, and flexible business and rental space demand is increasing. So as a matter of course, I would like to focus on this business. And even with this business alone, we can grow a business and leisure and lodging business, which is performing very well. We'd like to focus on that as well. But we cannot really rely on those businesses only forever. So we'd like to have the third pillar, fourth pillar, one after another. So the second bucket is the vertical integration type of business model where we are working with Lily Color. So this is an area where we're challenging. We have done a TOB to make Lily Color a subsidiary, fully owned subsidiary, and using their wallpapers and their interior materials, we are doing in-sourcing, in-house production of those materials to maximize both revenue and profit. And we like to regenerate those businesses. And the third pillar, Novalese, through the consolidation of the industry, we did the TOB to make Novalese as our subsidiary, which is a bridal industry company. And we have formed partnerships or alliances. And although people say bridal market is shrinking, but the market was 700 billion yen, but it's been shrinking to 500 billion yen. Even though it has shrunk, but still it's as large as 500 billion yen. So we'd like to roll up in this bridal industry to enjoy the survivors' profit, to create and show new values as a bridal business. And we'd like to contribute to the consolidation and reorganization of the industry of the bridal business for the coming 3 to 5 years. And fourth business pillar. So we are working on a regional revitalization on the trial basis. My hometown, Oita, is a location where we are working on the regional revitalization business format. And Oita Torinita, which is a J2 soccer football team in Oita. And we are constructing a hotel in front of the station. And we are participating in the development of a park. And in this endeavor, using the sports contents, we are trying to activate the region. And we are trying to promote as a tourist spot. And rental office incubation, rental spaces, and the party and social gathering spaces. So there are many areas of the business where we see opportunities. So we think we can make announcements in the future on some of those new businesses, fourth and fifth new business endeavor. And if we can, we'd like to promote horizontally as well. So basically, regeneration is a keyword. So based upon this regeneration as a keyword, we'd like to regenerate or rehabilitate locations, businesses, spaces. So we'd like to activate like Millfield, like dessert type of layered business model, driving both revenue and profit. Now, what is the TKP's strength? As you can see on this page, the business strength is a customer base. We have listed companies. More than half of the listed companies in Japan is our customer. So we have the strong customer base. We have as many as 30,000 companies as our customers, and they are actively using our services. So mainly those customers, we can provide herd contents to them for rental spaces, hotel, leisure, lodging, and rental spaces for events. So we have 30,000 customers, and we regard them as OS.
And on top of that operation system, the applications, I mean, in PCs, you have the operating system and application software installed on top of that. And so the different services, the ASL, will be enhanced as if they were applications on top of the operating system. And so for the customers, the 30,000 customers who's repeaters, we are always thinking of providing better services or better content services. And so the different services will be provided as our business, and by capturing and acquiring different businesses, we want to offer them into the 30,000 customers so that we can further increase our sales and profit. And that was the brief introduction to our strategies. And now I would like to talk about the share price. And until now, in 2019, we had a public offering of 4.28 million shares, and we always wanted to buy them all back. And 3 months ago, we announced the buyback in the previous earnings call, and the buyback has been quite smooth, and we have completed that, and we were able to acquire 2.14 million shares. And this time, we want to because the sales and the OP and the ordinary profit was very strong for the financial year that just ended, and we want to use them all for returns, and that is why we have decided to do another round of buybacks, and a maximum of 3 million shares and a maximum of 3.5 billion yen worth of shares will be acquired between April 15th to June 30th, and we will be buying from the market of the Tokyo Stock Exchange. And 3 million shares will be the maximum that we want to acquire. And with this buyback, the public offering that we issued of 4.28 million shares that we offered in 2019 will be all bought back. And after buying them back, we want to further improve the efficiency, including the balance sheet. We want to be more efficient in our financials, and we want to improve the efficiency of our balance sheet, and including the return to our shareholders by generating more profit. We would like to return more to our shareholders. That is all for me. Thank you very much. Now, we would like to move on to the Q&A session. There's no limit to the number of questions, but we would like to answer the questions one by one. If you have any questions, we will bring you the microphone, so please mention your company name and your name before asking your question, please. So please raise your hand. The person in front, please. From SMBC Nikko Securities, my name is Tazawa. Thank you for your time today. So I would like to ask you 3 questions in total, one by one. So for the fiscal year that just ended, talking about the TKP standalone basis, Q4, because of some seasonality, the margin was lower in Q4 compared to Q3, and I understand that. But compared to the Q4 of last year, the margin improvement, well, there's slight improvement, but gross margin improvement was pretty much flat, and I was hoping that it would get better. But can you explain the reasons why it was flattish? I mean, food and beverages are growing, but the in-house conversion maybe was not progressed. Hotels were good, but the OTA reservations cause you pay you more cost. Were those the reasons? And going forward, I think the margin would the margin get better for TKP business on a standalone basis? Is that fair to say so? The margin in Q4, I said that there was a 6,000 tsubo worth of space being opened in the presentation, but in parallel to opening the spaces to capture the margin, because we are doing that in parallel, we are using some margin to open those new facilities. And so it's not that the margin is not growing because of some bad reasons, but we are just in a phase before increasing the margin. And so the food and beverage margins are getting better. Is that the right understanding? Yes, we are increasing the in-house ratio, and we are able to offer more food and beverage ourselves. So yes, thank you very much. My second question, for this year's plan, I think there was a slide explaining about this year's plan. I think it was page 27. And OP margin is 7.5 billion, so the OP is growing, and the ordinary profit is pretty much flat. It's 6 billion plus 3%, and so the midterm plan, you were quite short against the midterm plan, and so the 7 billion yen. What is the breakdown, especially TKP itself? You have 5.5 billion for the fiscal year that just ended, but how will that grow this fiscal year? If you could share that with me, please. And also for the midterm plan, you are going to be falling short against the midterm plan. And if you are going to revise the midterm plan, when will you be revising? So the plan for this current fiscal year, for the three segments, we have three segments, X TKP and X Ricara and Novarese, and there are three segments, and this current fiscal year is a combination of the three segments. And for each segment, the breakdown is not disclosed, but for each segment, we are quite conservative. Especially for TKP, we have a very conservative view compared to the year-end result. And so in that context, we want to make sure that this is a must-achieve target. So the margin for TKP, you said that the margin will get better or improved for the TKP, and I understand that you are going into that direction, but does this mean that you're just being too conservative? Yes, for this year's fiscal year's plan, yes, that is our view. Well, we've done a downward revision once, and my intention is that we never want to do a downward revision again, and so that is why we have a conservative view to make sure that we will never be below this target. That is the intention behind this number. So do you have any plans to revise the midterm plan? Well, at this point, we have no plan for the timing of making the revision, but once we have a better visibility of the numbers for each segment, we will revise at the right timing. And the third question is around buyback. You talked about the buyback of doing another 3.5 billion yen worth of buyback, and you explained that the public offering that you did in 2019 is something that you want to buy back, and so that you can be more efficient. So therefore, the buyback, this buyback that you're doing now is going to be the last round of buyback you plan to do. And since you're trying to improve the capital efficiency, and so the idea is to cancel those shares that you bought back. And so if you have completed the round of the buybacks, do you have any thoughts around dividends? Can you share them with me if you have any ideas? So in terms of buyback, well, we generated the profit and we have this opening for the buyback, and so that is why we have decided to do this maximum level of buyback. And if you generate profit going forward, is it better to do buyback or is it better to increase dividend? And we will consider different options. But personally, for anything where we can do buybacks, we would like to do buybacks. And for dividend, including the discussions around what the payout ratio should be, once we are able to confirm that we can stably generate a profit, we will first consider doing buybacks and then consider providing them as dividend. And in terms of whether canceling the shares, the bought back shares, it doesn't matter which way. I mean, if we can use it flexibly going forward, then we might just own them as treasury shares, but we want to be flexible around that. So going forward, you might be using part of the profit through buybacks or some returns to the shareholders. Is that your idea? Yes, we have gone back through overcome the COVID pandemic, so we want to give returns to the shareholders.
Thank you so much. Hi, Ozawa from SBI Securities. I have two questions, so I'm going to ask one by one. First question is on the hotel business. For the year just ended, revenue increased by 30%, and forecast for this fiscal year, there was a phrase that you are based on the results of the year just ended to create a forecast. So there are opening associated costs, but for the year just ended, what is your take on the profitability? Are you expecting the improvement of the profitability of the hotel business in the new forecast? That's my first question. Well, we do not disclose the breakdown, but for the hotel business, we are performing very well, especially existing upper hotels being taken over by us. Are performing very well. So from day one, we can generate high revenue and profitability. And they are going to start contributing more for the full year. So as we include them for the longer period within the year, we see higher contribution. So the image, the cherry blossom season was wonderful this year. Last week and 2 weeks ago, Tokyo, TKP franchise, Upper Hotel, Ueno, Nippori, performed very well. In the past, ADR was 8,000, 9,000 yen, but ADR is selling at 18,000 or 20,000 yen per night. So in specific locations at specific time, Kyoto, Tokyo, or Hokkaido, that is good season now. So Fukuoka is performing very well at the moment. Hakata, Tenjin Daimyo, hotel locations, ADR is really high. RevPAR is really high, which is much higher compared to pre-COVID. So our hotel business is doing very, very well, especially inbound foreign travelers. So many, even though there's Trump issue, but unless yen becomes stronger than 120 yen to the dollar, this momentum is not going to stop. So continuously, we are going to see the momentum for the hotel business, I think. Upper Hotel is contributing positively, but Shoningahama in Beppu, are you getting the expectation or contribution from them? 1.8 billion yen is a startup cost, the initial cost. So there's the initial cost, but land cost is not inexpensive. So it's only the depreciation of the building in comparison to the sales. And this building has a history, good track record, so we'd like to increase ADR, appealing to inbound tourists. So we expect a stable revenue coming from this location. And another question, Fabit business. So TKP and Fabit collaborating with each other, that sounds good. But in Shibuya, the price is quite high per seat. In the past, office charge was much lower. So I think you can increase the price by working with Fabit. So what is the difference of the profit structure between TKP standalone and Fabit compared to the renter spaces? It's less labor intensive. So I think it takes less cost. But is it a highly profitable business? And volume right now is not so large, but would you please give me the explanation on the profitability structure? So the reception is going to be shared. So it's TKP, the head office, the parent company. So TKP and Fabit, you should call it TKP Fabit, time-based rental space. Anyway, TKP Garden City Conference Center. At the reception, we have our employee or employees, and around the reception, there is a lounge. So we are going to expand the lounge a little bit to co-use as the Fabit reception. So we have one receptionist, and Fabit customers can use TKP lounge and vice versa. And we had redundant space, open space, which can be now utilized as a co-working space without any fixed assigned seats. And also, when the shape of the space is not good, then we can convert to the meeting spaces. And for the meeting rooms, until we get the monthly contract, we can just lease them on the hourly basis. In the large space like this, we can utilize them as meeting rooms, and we can sell as temporary offices to large enterprises. So we can just sell the big space as temporary offices for large enterprises. So up until now, the brand image was fixed, like time-based rental is TKP, but we'd like to change that image so that they can flexibly use the space on the monthly or on the timely basis. For the Tsubo sales, 30,000 yen or a little bit more. So even though the price is not higher than 30,000 per Tsubo, cost is cheaper. So I think your option makes sense. But if you charge tens of thousands yen per seat, then probably you can charge 80,000 or more for the space. So if you'd like to increase the unit price, then can I understand that it's going to be higher profitability as a total? During COVID, the price did not really increase for time-based rental. But at the moment, for TKP, our price point has been increasing. So meeting room rent is increasing and the supply is tight. So F&B and space, lighting, and acoustic, and we've been producing events as well by providing different contents. So we are increasing the price to 80,000 or 90,000. If you look at time rent, it's been increasing, of course, and monthly rent is increasing. But especially time rent is increasing, even though occupancy is not increasing that much. So it's all about supply and demand dynamics. We like to keep it tight to increase or to keep the price high. And for the rental spaces, it can be regarded as a stabilizer, providing stable revenue streams. And we have the stock business, which is the hotel business, which is even more stable. So we have those hotels as assets, generating stable revenue. And semi-stock business is a rental space business, and flow business is a timely rental business where we like to lift the unit price. So that's our growth story for the organic growth. Understood. Thank you.
Thank you very much. Is there anyone with any other questions? The person towards the front, please. My name is Tsukuda from Toyo Keizai. Thank you very much for your presentation today. I have two major questions, starting from the first one. For this fiscal year forecast, TKP OP is increasing by a little bit more than 1 billion yen. And of course, because the fiscal year is a little bit different, so it's not that simple to compare. Ririkara in December 2025, the increase in OP was 850 million, and so compared to that, the OP increase for TKP seems a little bit low. And Kawana-san, you said this is the minimal line that you want to achieve, but I think it's a little bit too low. So when you take that into consideration, although this is the minimal level, if the OP growth is only this much, the rental space growth might be a bit difficult, is the concern that I have. So I'd like to understand your view going forward. And so I've always said that we're trying to achieve 10 billion, and the rental space business is growing and it's doing really well. And once we finish the first quarter, I think we will have a better visibility for the rental space. And for Ririkara, including structural reform, we are working to diversify the income. And of course, we may be making new investments and we might have to use some expenses. And so the volatility might be high. So yes, we are having a pretty conservative view on that. Just from my understanding, with the structural reform for Ririkara, how much cost increase are you expecting? I mean, you're sending a board of directors and you're trying to drive the structural reform, but what sort of costs are you expecting? I don't understand the major cost factors, but what are you expecting? This is about bringing the interior construction in-house and the labor costs related to that. And also there might be some upfront payment that we have to make. I mean, we're just selling through, but instead we will move into construction and designing, and we have to increase the headcount to do those work, and that sort of cost might be incurred up front. And including those aspects, Ririkara, I'm sure, will be announcing the plans. And once the plans are available, the TKP consolidated numbers will be revised. And just related to that, as a follow-up, recently wage increase is movement that we're seeing, and I think it's going to be important for you to secure skilled people. And labor costs, in terms of average salary, will probably need to be increased. And based on that assumption, you're probably coming up with this forecast. So I'd like to understand your views around investment into people. Yes, of course, we are raising the labor cost based on the industry standard this fiscal year. And that's, of course, incorporated into this plan. And we expect sales will grow much more than the labor cost increase. And so this, I said, is a number that I will never lower to a downward revision. And so this 7 billion is the minimal target that we are setting, and we want to try and achieve as much as we can. And we are setting the milestone towards achieving this 100 billion target as soon as possible. So we will look at the numbers in Q1 and Q2 to make necessary revisions on the plan. Okay, well, as a second question, in terms of the returns, you said once you're able to deliver stable profit, you will consider the returns, including buybacks and dividends. But looking at the current level, there's a certain level of sales that allows you to absorb the big cost, and based on that, I think you're already delivering stable profit. But what do you think is still missing? Well, because we are seeing stable profit, we did 3.5 billion and another 3.5 billion worth of buybacks. I mean, we are already spending that much money into the market. If it was a dividend, I mean, if we raised the dividend payout ratio to 30%, I mean, it's only 3 billion yen. I mean, if it's more stable, a dividend might be enough. But for the profit that we generated, they are all invested into buybacks. And during COVID, over 3 years, we will always read, and we had a loss of 1.88 billion, or 11.8 billion, and so we are. Since we are generating profit, we want to return to our shareholders. So we want to try and absorb as much as possible through buybacks. And once we do that, we will consider providing stable dividend. Well, buybacks, I think your behavior is to continue considering the possibility of buybacks. But I think you might be able to offer some sort of a framework. You have a pretty good cash, and you can probably give you an outlook as to what you plan to do for a buyback. Or are you not there yet? Well, we're not there yet. If the share price is low, we want to try and buy them back every 3 months, of course. Thank you very much.
Thank you so much. Hashimoto from Yomiuri Shimbun. On page 28, regional revitalization. I may have misheard you, but you said in 5 years, or in 2025 or onwards, or in 5 years. So did you mean the collection period of the investment, which may take 5 years? Well, this is the first and second and fourth and fifth seller. We have the organic business and the second Ririkara project, which we are working on, and the third consolidation and roll up, which is going to take was starting from 2028 onward. So the fourth driver is going to be in 5 years from now. So by phase, gradually over time, we'd like to stack up these pillars or drivers. So we have the football stadium starting from 2028. Is going to be the start of that stadium to be completed in 2028 or to 30. So the all-out contribution is going to be for Upper Hotel and the new JTB building where we are developing the new location. I think it takes 3 to 5 more years by spending some cost until we see the revenue and profit for those new projects. And that's why I said in 5 years. I understood. Thank you. Regional revitalization. So PFI in Oita, that's going to be the first, and you're going to probably take on other projects. But what would be the areas? Would you like to do that second or third in Oita as well? Well, other than Oita, we have locations from Sapporo all the way to Sapporo and Kagoshima. We have the franchise network across the nation. And we'd like to work with municipalities across the country to take on PFI projects in Kanto or other regions. There are many other projects in other areas. So whenever the opportunity is presented, I would like to grow regeneration of regions. Sorry to ask you about Oita, but shared space and the social gathering or party locations, I think you wanted to do those businesses as well in Oita. Are there any specifics decided? Well, there are some which have been decided, but it's too early for me to announce, so we cannot really give you the details at this point. Understood. Thank you. Are there any other questions?
No? Thank you very much for asking so many questions. That will be all for the financial announcement for TKP Corporation for the fiscal year ending February 2025.